So, summary of preliminary results, as mentioned. Final audit will be next week. We don't expect major differences. And here we are, the major highlights. Very strong highlights. Very strong payment contributed mostly to the operating profit. Within payment, e-commerce, processing, independent POSs, IPT, and ECR that have shown the biggest growth. Dedicated solution, the other business line, has shown a rather poor year, a weak year versus previous ones. We had some write-offs that we communicated during the year, most of them second quarter. And also we've observed shift of projects to 2025. So this all contributed to fairly poor performance of this business line. Banking has been better than expected. In 24, in the beginning of 24, we expected a bigger decline, but somehow some implementations were prolonged, and also we won some additional channel solutions and security and compliance solutions, which contributed to that. Cash conversion is better in Q4, as we mentioned after Q3 that we expect to see improvement in Q4. Michał will comment the trends later on next slides. Collection delays can be visible in Middle East and India, especially in Dubai and Middle East. We decided to do some write-offs. It's not that we don't expect these receivables to be collected. It's just that we want to put some discipline in front of other managers to have more pressure on getting it back. There is a material negative impact of strong PLN versus euro. So this appreciation of the zloty has negatively hit the PLN results, of course, not the euro results. And traditionally, we give you transactionality in a period. So you see still the dynamics up a lot. In e-commerce, 15% growth. In independent POS is 52%. And in traditional processing, card processing, 24% growth. Now, instead of giving you the highlights of the biggest deals, which was quite boring, we decided to summarize what is happening in each vertical. And again, as mentioned, this year was better than expected in banking. Channels solutions very much contributed to this and showed significant growth. Within these, we developed a new product called Financial Gateway, new technology unifying different payment methods for and connecting it to core banking, including SWIFT connectivity. And this has shown a tremendous interest in our region. Core banking solutions are expected to slow down. They slowed down already 24, in 25 as well. So we will see more of these channel solutions as well as security compliance solutions, where we see growth mostly in application app protector, application security technology that we have introduced, as well as spoofing protector. This is something that helps to avoid fraud costs of fraudulence who try to pretend they are banks. In dedicated solutions, this already mentioned about the weaker year. Shift of projects has happened mostly in billing and intelligent transport systems. BPM has been slower in 24. We expect here also a slight acceleration. In Albania, not so big, but the results were much weaker in 24. We see already some projects signed, mostly for the post office as well as public administration, e-Albania projects that will contribute significantly to 2025. Live as a product collaboration tool has been good on acquisition of new projects, not so good on delivery. So we must optimize and improve the cost of delivery in that product. And we've seen drop in third-party solutions, which is quite in line with our expectations and strategy. So this doesn't us, but this is very much visible. And in payment very strong in the lines as mentioned. E-commerce has been very strong in Turkey, Portugal, and the Adriatic region. So dynamics very much visible in all places, but Turkey, the biggest operation. So the growth is most on nominal numbers, most impressive. Transactionality already mentioned on POSs and ATMs. In POSs, we've seen decline in hardware deliveries versus 23, which has been very, very high all over our regions, as well as Spain and Portugal. ATM, after very weak 23, showed improvement, and this we expect to continue. And now the results. Michał, please.
Good afternoon. So first, Q4 results. The first two columns on the slide are total consolidated numbers for fourth quarter. And then third and fourth column is excluding hyperinflation reporting. So traditional view we show each quarter. On top line, -2%, so small decline of revenues, but change of structure of revenues. Own activities, own services and software revenues increased by almost 10 million euro, while resale, third-party resale, decline almost 12 million euros. As Piotr already mentioned, and this is not something what worries us. On operating profit, year-over-year growth by 6% in euro numbers and 3% in Polish zloty. This is due to strengthening zloty year-over-year. And EBITDA here, growth is even higher, 8% and year-over-year. Why it is higher than EBIT due to depreciation? It's obvious, but this depreciation is related mostly with assets recognized during purchase price allocation. We have recognized software which now is depreciated, and this is around 700K euro additional depreciation. Half of it is dedicated solutions, half payment. Below operating profit, on net profit, 2% growth year-over-year, but if we exclude non-IFRS items, so mostly valuation of put options and conditional payments, conditional considerations for acquisitions, and of course, depreciation of assets recognized as part of PPA, then this dynamics is higher, 16% year-over-year. When we look at financial activity, result on financial activity is around 400K euro lower. And we have few items impacting this. On one is positive valuation of contingents and puts. It's more than 5 million euro positive. But on the other hand, we have write-offs of goodwill on dedicated solution, plus write-off of goodwill related to reclassification of investment into Mobven to assets held for sale. And this is a negative 6.8 million euro. On top of this, we have better higher result on foreign exchange gains by 600K and 300K higher positive incomes from interests. All this together give, as I mentioned, 400K lower result on financial activity. When we talk about taxes, pretty similar, slightly higher effective tax rate in Q4. But when we look at annual taxes, effective tax rate is almost the same, but I will comment this a bit later. By segments, so verticals. Profitability in banking, as you see, decline. This is related to core banking mostly. Q4 23, we still have had core banking implementation, which were completed beginning of 2024, and this is why year-over-year we have a drop of profitability and drop of result in banking. In payment, pretty stable profitability, 16%, and growing revenue by 3.3 million euro. Growth is mostly in e-commerce and processing, and we have decline in ATMs and POSs. This decline is related with lower deliveries of devices in both lines. When we look at operating profit, it is also growing by 400K, with change of structure of this result. As you see on this pie chart, in e-commerce and processing and independent networks generated more than half, 56% of results, whereas last year in Q4 it was 41. And the last line, dedicated solutions. After a weak Q1, Q3, Q4 is better, growth year-over-year, and on over 4 million euro of operating profit, despite declining revenues. This relates with change of structure of the business, growth of own software and services, and drop of resale of third-party solutions. By geographies, good quarter for Southeastern Europe region, so Adriatic countries, and biggest growth in Serbia, 2.3 million euro, thanks to dedicated solutions on software and payment. In payment, growth mostly in e-commerce and processing, but also not bad for ATMs and IPD. And second country in Southeastern Europe is Bosnia, and with growth operating result by 1.4 million euro generated in dedicated solutions. As for other regions, Turkey, not bad quarter, 2.7 million euro result and growth by 300K. And India and Middle East, they contributed together 500,000 euro, but with included write-offs of receivables in Dubai. This 800K loss, you see 700,000 is due to write-offs. We hope to recover sooner or later those receivables, but following our policies and to be prudent, we included write-offs. As for drops, we have drop in Western Europe. It's mostly Spain and Portugal. Drop in dedicated solutions. Last year, so 23, Q4 was strong thanks to artificial intelligence projects, plus good in BPO. So here we have drop by around 400K, and in payment, rest of decline mostly in POS is related with lower deliveries of hardware. And Central Europe, here drop is mostly in payment, in ATMs area, where in 2023 in Q4 we did deliver bigger number of devices to one of banks. And let's move to results for whole 2024. Slide is pretty similar, not only in how it looks, but also about dynamics. Okay, revenues are higher year-over-year by 7%, but similar is contribution to this growth. So growth is only on own activities, so on services and software, which are higher by more than 30 million euro, and declining resale by 6 million euro. Operating profit growing by 2% year-over-year. In zloty, it is slightly declining 3%. So this 5% different resulting from stronger zloty in 2024. In EBITDA, similar as it was for Q4, growths are bigger, both in euro and zloty, and it's related with depreciation of assets recognized as part of PPA process. And again, a similar comment, more or less half in the dedicated solution and other half in payment. Below operating profit, in finance activity result on finance activity is 1.4 million lower than in 23. And there are, on top of those two areas which I mentioned for Q4, so valuation of contingent consideration liabilities and put options, which is positive. Around 7 million higher result on revaluations than in previous year. We have write-off of goodwills in amount of 6.8 million euros. This I mentioned it happened in Q4. But on top of those two big items, we have impact of dividends paid to minority shareholders for those entities which are consolidated using present ownership method. In this case, the dividends lands in P&L, and cost of such dividends are by 1.2 million euro higher in 24 than in 2023. Tax, corporate income tax and deferred tax, effective tax rate is by 0.1 percentage point higher than in 23. So really immaterial. And the result by verticals. So payment, very strong payment, 30 million euro growth on top line and 8 million euro on operating profit level, with increased profitability by 2 points. And as you see, very similar picture to Q4 only. So growth is mostly in e-commerce and processing. Very good also independent networks of ECRs and IPD. But on revenue, we have also ATMs are not bad. Growing revenues and slightly growing operating profit thanks to the levers which happened mostly in Southeastern Europe, mostly Serbia, also to some extent Croatia. And post revenues declining due to lower deliveries of terminals. And talking about operating profit, e-commerce and processing plus independent networks, they generated 55% of operating profit. So something what we aimed to deliver. Yes, after Q1 we commented that our goal is to exceed 50%. It is a bit more, but it's pretty good growth year over year. Coming back to segments, last segment is that first let me start with banking. So banking, as Piotr mentioned, above initial expectations, but declining year over year. This is, as we already commented, due to less core banking projects. Those big projects, and they were completed, and now we have more projects in channels than core banking, and significantly smaller projects. And the dedicated solutions, Q4, as you saw, pretty good, 4 million result. But as you remember, after 3 quarters, dedicated solutions was negative. Partially we recovered, but only partially, and year over year result drop is more than 6 million euro. All this is due to lack of project. What we hope will change and improve in 25. And let's have a look at geographies. Southeastern Europe, pretty flat, slightly negative. Lower result in Bosnia, better in Serbia, to comment those most important. But the bigger impact is of Central Europe, which was weak this year, mostly due to Romania in area of the dedicated solutions and payments. And what was compensated by very good Turkey, and this we already mentioned, in payments, mostly in commerce. and also not bad Western Europe, where we have growth in payment, but with change of structure of business. So slowdown in POSs, this traditional business, lower deliveries of devices, terminals, but growing e-commerce and processing line. And India and Middle East, they both contributed around 1 million euros to results in 24. And just to recall, we consolidated for half a year. And of course, it includes those write-offs which we included in Q4. Maybe we'll manage to recover in 2025. So this was about results, and few words about cash position and liquidity. As you see, comparing to September, so Q3 end, we see improvement. Cash balance is higher by 16 million euro. Lease liability is pretty similar. We paid back part of debt to banks, around 7 million euro. And also deferred and contingent payments for acquisitions, so liabilities they decreased. As end of December, those liabilities are 10 million euro. It doesn't mean that whole amount will be paid during next 12 months. Because there is half of this more or less is put option for held by minority shareholders of Necom Plus, and it's not necessarily it's not sure if they will execute or not. So net cash 300,000 euro positive. As I mentioned, more than 30 million euro improvement comparing to September. Below net cash, let me comment inventories. They are pretty high, 26 million euro. Around 75% of them relates to payment business. And some part of this, around 5 million euro, are inventories which are dedicated for installing as part of outsourcing business, where we outsource POSs or ATMs to banks, or part of independent networks. So we expect around 5 million euro of this inventory to be transformed into fixed assets during 2025, and the rest is more for resale and deliveries to clients. Operating cash flow. Here we also see improvement, but after a very weak first half of 24, and also 3 quarters were not spectacular. So almost 48 million euro operating cash flow, what gives conversion of EBITDA into operating cash flow of 65%. Not high, below expectations, but we need to remember that 23 was spectacular due to situation where our clients in Serbia and Romania paid us for deliveries, and we have not settled our liabilities toward vendors, because it was related to third-party business, and we paid those liabilities in 24. This is why we also calculated kind of adjusted operating cash flow to EBITDA ratio when we adjust for those two big but untypical cases. This adjusted is still below let's say expected level, but as you see, the difference is not that huge. As you see in cash flow, in second line from the top, investment in infrastructure for outsourcing and on networks in 24 was pretty big, almost 14 million euro. And this is related with big investments in Serbia for ATM and POS outsourcing. These are projects which we have for 7 years already, and we reach this moment in time when we need to renew the fleet, so replace ATMs or POS devices into new ones. And this is why this CapEx was bigger. When talking about regular CapEx, as you see, it is on very similar level as in previous year. Okay, so this was about cash flow, and let's move to outlook for 25.
So as you see on the on the slides here, we have quite a nice growth in backlog, both for Q1 and the whole year, even bigger. There's a slight difference in ASEE. The growth is smaller. For the whole year, it's acceptable, 10%. For Q1, it's only 4%. In Payton, it's very, very impressive. It's close to 20% for both periods. And generally, I would say that this is pretty optimistic. Yes, we are quite positive about 25 outlook. We more than for 24 in the beginning of 24, and we see definitely some growth ahead in 25 in the upcoming time. Yes, so let's see. We would expect this in all business lines, in dedicated solutions, in Payton as well, but maybe banking would be more flattish, as said, mentioned earlier. And having said that, we are very open to your questions. If you have any, you can put them on chat, or you can do it in voice, whatever would be more easier or suitable for you, please. If there's any questions, please type them or mention them. We are very happy to open. We'll be publishing the official results next week, audited ones, but we don't expect any major differences to the numbers published. Do we expect changes resulting from the change? No, actually, from the change of shareholding structure at the ASEE Poland level, we don't. At least we know very little about the transaction itself, but so far we expect business continuity as is. If there would be anything, we would inform. For us as management, me, a very small shareholder, it is critical to keep up the motivation of the management and the dynamics of the group, which has been probably one of the highest in the ASEE Group overall. Yes, so I hope the new shareholding structure will not deteriorate that, but I haven't had any meetings, or we didn't have any interactions with the new investors, so we cannot comment anything. Okay, some more outlook on the growth. Well, basically, we on a cleared, corrected, non-inflation basis, we showed over 51.5.6 operating profit. Yes, also the same type of cleared profit. The analysts are expecting us to do 56, 57, something around this. And we think this number is absolutely realistic on a group level. If we can overachieve this number or not, we'll see during the course of the year, and we'll be informing you. Yes, but this is on a so we try to be pretty modest on our growth outlooks as usual, not to have negative surprises, and we'll see in the course of the year how the backlog build up and deliveries will be happening. As mentioned, dedicated solutions. Also answering this part of the question, has been very weak in 24. Yes, we have had write-offs and we had movement of projects. So improvement on more projects, no write-offs, should be already a significant improvement for the profit of this business line. Whereas in Payton, we have some investments to be made in not only market developments, but also into some solution revamp, especially in Turkey. So this might eat up a bit of our profit in Payton, but we do expect bigger dynamics there as well. So that's maybe answering. If not, please put some additional questions. There is a lot of talk about AI recently. Is there any impact of AI on your internal processing and cost of providing services? Can you automate more? What kind of AI solutions have you provided to clients? Well, first of all, I want to mention that we have a 50 people group of AI engineers, machine learning engineers, who sells and provides AI services outside to our customers. Yes. In terms of AI usage, it's probably the quickest effect we'll be seeing, and we are seeing on testing level, yes, and quality of code level. And here we are already using it, different independent tools, and we'll see more usage of this, yes. But AI improvements will, in the beginning, improve and help in the lower value-added areas of our business. So yes, we are aligned, we are working with it, and we are also working how to commercialize the knowledge and capacity we have within AI in our group. And this has been it has drawn a lot of interest from our customers. On the other hand, they are still seeing what they should do, especially banks on their own, how to use it, a lot of hesitation, a lot of questions. So the true commercialization of this, I think, will require still some time on selling point. On usage internally for cost optimization already being done. Anything else that we could clarify? If not, we are really inviting you to direct contact after the close period, so after next week publishing date. And we have a question. One more. Just a second. Do we see pickup in activity? Well, in payment, very much in payment. In project-based basis, it depends in which area. Customers are becoming more conservative. What we are commenting in banking, we have a wave that is shifting into insourcing very strongly and then moving to outsourcing. I think we have just experienced the peak of insourcing recently, or we are just experiencing it now, and we'll see more movement to outsourcing. Also, let's say, whatever the weaknesses of European Union are visible, they are visible as well within the cooperation with the customers. So depending on geography, you see there is a preference to take services much more expensive from more known or homegrown geographies by big international customers. I think this is slowly changing, and trust to emerging markets, especially Central and Eastern Europe, is growing. So we do expect more interest in our projects, and especially in channel solutions, not in core banking solution. End of war. We are not that much affected by the war, either in Middle East or Ukraine ourselves, yes. I would say quite universal answer, pretty boring, I would give, is that any stability always is good for business. Any predictability is good for business. So in this case, for sure, it will help, but we are not expecting any breakthrough changes. We don't know what the peace treaty in Ukraine will be. If it will be very humiliating for Ukraine, we expect additional migration from Ukraine resulted from frustration of the nation. So, basically, demotivation, frustration, and depopulation will continue. If this will be as it looks, it can go the direction, but we don't know how it will look at the end. Labor market. Labor market situation has improved since the pandemic. Our rotation numbers have decreased dramatically. The prices, the costs have not maybe decreased, but the pressure on salaries has dropped very much, yes, on salary increases. So we see more pressure now on managerial levels than on average IT levels and programming levels. The convergence from emerging markets to developed markets in salaries, I wouldn't say has finished, but it's continuing all the time. So the differences taken, the purchasing power parity are not that big in salaries anymore. So I would say quite stable, yes. the biggest challenge on the labor market, but resulting from exchange rates we have in Turkey, where all the employees are expecting inflation indexation base, even above inflation indexation. On a regular basis, inflation is very high and lira is depreciating much less, 20 to 30% versus 50% inflation. And this is over the last 3 years. So in dollar, in euro terms, the cost in Turkey have become enormously high. Doing and developing some things in Turkey maybe could make sense in the past. Now, vice versa, we are discussing and concluding how to do it and how to shift to other markets from Turkey some of the resources. Any other questions? Okay. I believe we are good. Please contact us directly if there's anything additional. We don't plan any major mergers and acquisitions in 25. Some small ones, yes, but not big ones. We want to consolidate what we have acquired and make it more corporate and leverage on organic growth very much. So this is an outlook in the near future. We know answering your first question on the partner for ASEE Poland, on the company who acquired a controlling stake or is acquiring now controlling stake. We know they are very acquisitive. We hope this will not limit our acquisition appetite due to their policies, but this we cannot tell until we see some things in reality. So thank you very much. Thank you for coming, and we will be in touch, I hope. All the best. Take care.
Thank you.